Oh, man, am I beat. Whew. Good afternoon, everybody. You guys can hear me, right? Cool. When is the weekend? It's been a long week. Long week. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I'm out of my index longs. I sold some puts. They're naked. They're not necessarily huge. They're not necessarily small. I think that kind of covers everything. I don't have any real shorts on anymore. Okay. All right. The market. Are we up $4 after hours? This market is insane. This market is insane. If anybody has, without me having to deal with doing the math, the actual percentages that we finished at today, just let me know. I'm not going to bother to attempt to calculate them when we're up $4 after hours right now. Dave S. saying that the SPY was up 0.18%. Do you have Qs and IWM? SPY 0.18% is down. SPY was down 0.18%. I actually thought we closed green. Interesting. But that's a nice little number there after our 5% plus days that we've had for a couple days in a row. So we'll take it. That's for the SPYs. I don't know if you got Qs or IWM, but Qs here are also trading $4 up after hours. The AVGO headline, $10 billion share repurchase authorization. That helps. That helps. The QQQ range was 10% today. We had a, is that right? Yeah, I guess it is right. Holy cow. The intraday range was, no wonder I need to be checked in the loony bin. Yeah. It's literally the movement of a market correction all in that one day. And the IWM here is also up a couple dollars after hours to be positive 0.13%. So it looks like we closed negative in the SPYs by a small amount, negative in the IWM a little bit, and the Qs. The Qs closed, I think, small green, if I'm reading that right. What a day. What a day. Where do I begin? Yeah, the S&P was definitely in a bear market, but you don't include, like, officially, it doesn't count as a bear market unless it's closing prints. But as far as I'm concerned, for us traders, if you traded through the 20% pullback, it's a bear market. So yeah, I mean, just a crazy session. So let's try to recap it if we can. All right, so Thursday, Friday, there's so many fun statistics that you could talk about. Like I know Thursday, and I think Friday might have been worse. I think Thursday was the worst day in the S&P in the last 10 years outside of COVID specifically. And if you include COVID, it was like the 5th worst day in the last 10 years or something. And then the Friday, I think we were down even more. And then the combination of those 2 days, the Thursday and Friday, I think I read is the 5th worst 2-day combination for the market going back to 1960. 1960. My dad was 9 in 1960. So yeah, that just shows you how bad that those 2 trading sessions were. I mean, that includes the tech bubble blow up, the financial crisis, COVID, a lot of other bear markets in between. Worst, 5th worst 2-day session going back to 1960, Thursday, Friday. Then on top of that, when the futures opened up last night, I did something that I try not to ever do. I really try. It was impossible though. I had so many people texting me. Um, I really genuinely, and I actually think that this is a great suggestion 99% of the time for 99% of the people that are out there if you're trading stocks. Don't check the futures before you go to bed. Don't do that to yourself. If you're in a stock position, you can't do anything about the futures anyway. I can tell you from experience, all looking at the futures right before you go to bed is going to do is make you not sleep. Yet last night, kind of impossible not to. Especially for me, I had just so many people blowing me up. Um, so futures, I remember seeing the Qs down almost 6%. The Nasdaq futures down almost 6%. SPY futures down like around 5.5% at one point. So not only did we just come off the worst 2-day session, or the fifth worst 2-day session between Thursday and Friday, going back to 1960, but in addition to that, the market at one point last night was set to gap down 5.5, 6%. Insanity. Just so crazy. And I don't know if anyone knows on the intraday today what we were down the most at intraday. If anyone knows that stat, if anyone like saw how much we were down at a certain point, you could tell me. I'd be curious. It's like, honestly, it's already out of my brain. But SPY is traded as low as 482 today. Holy crap. We closed at 505. Low of the day is 482. That's a lot. That's a lot. So, I mean, this is historic stuff. The Nasdaq touched the 2022 high. Okay, yeah, and I mean this is historic stuff. The not just the amount of the pullback, the speed of the pullback, with where the futures were trading yesterday, with where we were down to at lows. Again, if anybody's got that number, I'm really curious. I think I saw us down 4+% at a certain point, but I'm just kind of going off memory, and I don't feel like sitting here and attempting to do the math on the numbers. But we were extraordinarily oversold by many measures, and this was a research report that I was reading. We're more oversold at any point since maybe a certain point in the financial crisis. So think about that, right? We were more oversold today at lows than at any point during COVID. Think about how crazy that was. COVID, hopefully, is a once-in-a-lifetime event for all of us, where we had a new virus appear and the government caused everyone to say you can't even leave your house. Everything stopped. The world stopped. Yet we got more oversold at lows today than we did in COVID. I mean, that's crazy. That's crazy. And I'll tell you something else that kind of really annoyed me. You know, I always defend Jim Cramer. Like, I always defend him. I always say I don't think it's fair that he gets such a bad rap, and you should do the opposite of whatever Jim Cramer says and all that stuff that everyone always goes on about, because I think he's got a really hard job. Him calling for that 1987 crash for today that then was getting a lot of circulation because it's a hell of a headline is it actually made me lose some respect for him. That is not what you should be doing in this situation. Can the market continue to go down because we have low growth and tariffs and stuff like that? Sure, the market can continue to go down. I'm not going to say that the market can't continue to go down, but to try to say that we're going to be down in, try to make a comparison that we're going to be down an extra 22% today, like really truly made me lose a little bit of respect for Cramer. On his morning crew, he asked if this is like 2007. Never seen David Faber get so mad at him. Interesting. Yeah, so the bottom line is that this was just completely insane how much we were down this morning on a day 3 down. I mean, let's try to do my favorite little exercise as another example here, which is just a measure of extension off the ADMA. So low of the day today is like 482, a little bit below that. The ADMA is at is at 537. So what is that? That's about $55. $55 of downside extension in the SPYs off the ADMA at lows today. The Qs, let's see here. The Qs, 452.60, and the low is 402. That's actually easier math. Yeah, $50 extended off the ADMA in the Qs. I mean, holy cow. Let's look at Pat's note. Where's Pat's note? There's some good stuff here in Pat's note, but look at this. Short-term composite indicator, 0. The thing was at 0. And that's as of Friday's close. And then we gapped down. The short-term tactical is super deep in the green, and that's as of Friday's close. That's not including the low of the day today. That's not including the gap down that we had this morning. I mean, this is insane. Look, you got to come in and you got to buy it. What we were talking about in the morning meeting today was that the execution is tricky, but potentially tricky, but you got to come in and buy it. You can be long versus pre-market lows. You can be long versus a signal, whatever it is. And then, by the way, guess what? We called out the long off the third 5-minute bar low in real time. And I really, really, really hope the traders on the team caught that. Because if you think about the risk on that, I know that we're moving so fast, like insanely fast, like individual 5-minute bars. You got the SPYs moving $5 to $10 at some point. But we kind of called the long off this low before the candle even actually closed. But even if you assume you got the closing price, which I think that you could have gotten a better price than that, you've got $2 worth of risk in the SPYs. Or choose your stock that you're trading off of base of the SPY signal. Third 5-minute bar down, most insane amount of extension on every single time frame that you can think of, and then you can go long the SPYs here for $2 worth of risk, or again, choose your stock. The game plan, we talked about the game plan in the morning meeting. We talked about a similar game plan that we attempted to do a couple times on Friday, but it never fully played out. Get the risk covered. I don't care if you bought SPY, you know, whatever, 483.80, and you were selling stock at 485.80 to cover your risk, and then we went up $40 more from there. That's a responsible sale, because that sale is not about booking profit. That sale is about managing risk. Because we tried on Friday to put ourselves in the same situation a couple times where you could get massive reward potential for small risk, and we had trades, pretty much every trade that I called out, because we closed on lows, eventually failed. But almost every trade that I called out gave at least some sort of a bounce off my call. So if you have a responsible game plan, and a responsible game plan can include being greedy, but if you have a responsible game plan where you are just covering your risk, that is never the wrong thing to do. Because there's a chance that you took 6 tries on Friday, and every single one of them failed, but 4 out of 5 or 5 out of 6 let you get your risk covered, or potentially let you get even more than your risk covered. I remember I was calling out this low as well. That was good. That was a decent trade. So that when you eventually get stopped out on 4 out of 5 or 5 out of 6 trades, you're either closing at a 0 P&L, you made or lost nothing, which is always fine on a failed trade, or even made a little bit, and then maybe there was 1 or 2 there where you took a shot and the thing just straight up failed. Then today, you try it with the same game plan. So I just want to repeat, I don't care if you sold stock by 486 in the SPYs if you're doing that to be able to manage risk, because who knows, we could have broken this low. I thought that this was a good spot to take a shot. We could have broken that low. So you cover your risk. And then as soon as the risk was covered, I was saying, this sounds greedy, but hold some for a move to the ADMA on the 5. Which that alone, the move just to the ADMA on the 5, gets you to over 494. Let's just call it 494. So now you're getting $10 of reward on your first real sale, and all it is a test of the ADMA on the 5. And then we said at that moment, let's see what happens. We probably get a little bit of a pause here. Remember, we rejected at 10 a.m. on Friday, we rejected that first test of the 80 MA and then made new lows. It's not surprising. I didn't think we would make new lows, but it wouldn't be surprising if we got a pullback or we got a rest on that first touch of the 80 MA, and then let's see if we can pile on through. And we did. And then the next good spot to take a little bit of profit was into SPY 500, into the 21 EMA on the 5, which typically coincides with about the 80 EMA on the 15. So you take a little bit more off when you're no longer extended on the 5 minute, you take a little bit more off when you're no longer extended on the 15 minute, and then basically you hold. Hold 25, hold 50% of your stock to see what we can do. We just described the amount of downside extension that we have at lows this morning is historic. The 80 EMA is still up at 537 and change. It's going to work its way down, but it is not impossible for this market to get back to 520 something. I think I even said in the morning meeting or when we were talking in the VTF at some point after the open, it's not impossible to see 520 today. And I know we did see 520, but we got it off of like a rumor spike that they're going to delay the tariffs for 90 days. And then we came back down. But we were able to get to 520 at a certain point today. And you could have just been being super greedy and maybe take a little bit off incrementally on the way up and just see what we do and see if we can work our way to this 80 MA on the daily chart eventually. The only thing that I would note about today's price action, and Pat noted it fairly early, is it really, really felt like this market wanted to move higher versus move lower on news. The reactions that we saw, generally speaking, to positive tariff headlines on the upside were significantly better than the reactions that we saw on negative tariff headlines on the downside. And look what the market was able to do on just the thought of getting a 90-day pause on tariffs, even though it turned out to not be true. So let's hope and pray that if you got some long positions on still, which I certainly do, that we do end up getting some sort of pause to allow for negotiations. And I still think we will. That's what I said in the morning meeting also, is that, and that's even before we saw how the market was reacting to the news, was that I really began to feel that at this point the headline risk is to the upside for the most part. Not impossible. It almost seemed like almost every headline we saw ended up being positive today, except for anything that actually came from the man himself, from Donald Trump's mouth. There were a lot of headlines coming out that were very hard line about us actually doing this, and we're gonna do these tariffs. So, that's difficult. But I really don't think that he's going to. I'm still in that camp. I don't think that board that he pulled out on Wednesday last week is actually going to be what happens on Wednesday of this week. And does anyone know the actual time? Is that Wednesday morning or Wednesday night that these tariffs are supposed to hit? I should know that, and I don't. So if anyone happens to know and can let me know, it's an important piece of information, because it's a difference between us having one day for additional positive headlines to come out before this supposedly gets implemented versus 2 days for potential positive headlines to come out before this is implemented. So it's really positive if we can get anything related to deals being done, like a little bit of what we saw with Israel, a little bit of what we saw with Vietnam. But I want to see an actual deal get done. Like the language that was coming out of the Netanyahu meeting with Trump was incrementally positive, but it wasn't really what I wanted to see. The 9th at 12:01 at midnight, basically at 12:01. Okay, so that is Wednesday morning at 12:01. So basically, we just have tomorrow. Thank you, Boris. Good information. But I mean, we see what this market wants to do if they get rid of it. But I was really hoping that we'd come out of the Netanyahu meeting with them using Israel is an example of we're going to go to zero tariffs with Israel. They've agreed to stop punishing the United States. Whatever victory lap Donald Trump wants to take on it, I really don't care. Just get a deal done before this stuff goes through. Because if it goes through, we're in really big trouble. Um, so anyway, the headline risk seems like it is to the upside. We'll see if we're able to get some follow through. We closed today at 507 with the ADMA at 537. We're still $30 extended to the downside off the ADMA and the SPYs. That's normally as extreme as it gets, and that's where we closed today, and a little bit of a bounce after hours. And it feels like we should be taking a big victory lap because we were able to get a flat close with $30 of downside extension. There's a lot of room for this market to bounce if someone will just give it an excuse to do so, is my opinion. So I still think that the risk is to the upside, but we'll see how it plays out. Volume today was massive while I still have this chart up. That's pretty much it. I mean, you know, pick your name today. You know, we talked in the morning meeting today. It almost didn't matter the name, but you know, I know there people were looking at airlines. Obviously, people were looking at Mag 7, like Google and Amazon in particular was super strong early on in the day. Meta was able to give a decent bounce. We looked at Reddit off the gap fill here at $80 this morning, and some people I think were involved in, which was a decent trade. So, you know, there was certainly a lot of opportunity out there, but it all is stemming off the indexes. You know, we don't even have much that we need to talk about, in my opinion, for individual stocks right now. Analyze the indexes correctly, get the move right on the index, and then, you know, pick your stock. Some will trade better than others. You get some relative strength in certain places versus others. Sorry, I just got filled on something here. All right, it's pretty much all that I've got, I think, unless something else comes to mind. So if you guys have anything, I am, of course, happy to answer any questions. Liam, I love it. Happy birthday. We're still up here after hours, or pulled back a little bit? Pulled back a little bit. There's just so much volatility with this market. It's crazy. All right, let me look for questions here. Scrolling up in the VTF to about 4 a.m. See if I missed any. 4 a.m. Jeez. Been up since 2:15 a.m. local. Definitely feeling it. Not seeing anything. Not seeing anything. Is this a day where you should be okay to risk more than usual? I think so. I feel like you're flattish. If you're flattish P&L today, you didn't take the opportunity enough. Not the like a move back to highs from August, but enough to get paid for a few days. Yeah, you know, it definitely was a day to go for it. You know, like I said, the amount of extension we saw to the downside is something that we might not see again for decades. So, you know, it's just such a unique situation that when you have that happen, I think you got to go for it. And then the market gave us that great opportunity to go long off that third 5-minute bar. I don't think that worked for the IWM, right? But it certainly worked for the SPYs, the Qs, and many stocks. Oh, it did work for the IWM also. Yeah, the IWM never made any lows either. So you could have bought pretty much anything off that third 5-minute bar low and had a phenomenal risk reward there. And then, you know, you probably wanted to risk a decent amount. You probably wanted to try to take some size. That's one thing. I would more suggest that traders check themselves on how well they held, at least a percentage of the position. Like I'm saying, 25 to 50% of the position for really big reward off that risk is what you wanted to put yourself in the position for. So I get it. You know, taking a lot of size there is difficult because the market's moving $5 every 5 minutes at the index level for these ETFs. So, you take what you can afford to risk, and you probably should have sized up a little bit. But I would be even more concerned about reviewing your game plans today for everyone as a trader to make sure that they really did do the right things to put themselves in the position to just maximize the reward of their risk. I would be very, very upset if anyone caught that low that we called out in the SPYs and then was 100% out of their position by SPY 488 by the beginning of the next 5-minute bar. If you did that, I don't think that you'll be able to make money in this business in the long run. And I really mean that, because there's two keys to really being successful in making money in this business. One, and probably the most important one, is how you manage risk when you're wrong, is that you don't let your outsized days get too insane. But the other side is that you got to actually be able to hold the reward for continuation. If anyone watched when I spoke with Sammy Abusad and JR Romero on that thing that we do on Wednesdays, not last Wednesday, but the Wednesday before that, Sammy was talking about how, he had $100,000 in open P&L in his Tesla long, and that he was willing to give it back, and that he was willing to hold it. And I just wanted to pause and re-emphasize what he said, because that's the key to making real money in this business. The key to surviving and being able to make money is risk management, but the key to making real money, I think, is being willing to risk money that you've already made in order to make more. And I love being greedy as a trader, but I also want to reemphasize what I said earlier. There's a difference between being greedy and being stupid. You can be greedy. Going back to my example of if you just bought the SPYs there, you could be greedy if you took a little bit off at 486 to cover your risk. You can still be greedy and still do that. You're stupid if it's at 500 plus and you still haven't booked a penny of profit, because we are in a weak downtrending market. So be greedy when you've got the risk covered, maybe a little bit more than your risk covered, so you're going to make money no matter what. You want to do exactly what Sammy said, because if you're, I doubt he risked 6 figures on the trade to begin with, but he was six figures in the money. And if he was willing to give back that 6 figures to make more, that's how you turn a 6-figure trade into a 7-figure trade, to use his example. And then you can, break down the numbers into whatever's appropriate for your personal account size. But that is how you make money in the business. So I would be very, very disappointed with any trader, and you should check yourself to make sure you're doing the right things if you were 100% out of your stock by SPY 488 if you bought it that low today. Thanks for the question, Tate. Just checked some Sunday night futures content from last night, and yes, ES was down another 5% at some point last night, per your previous question about intraday down move today. Yeah, last night was bad. From Vikas here, we found only 13 of the previous 39 corrections eventually turned into bear markets, or as we like to say, all bear markets started as a correction, but not all corrections turned into bear markets. Yeah, I talk about that almost every time when the market pulls back 10%. I like to just remind people that we can go into a bear market, but when you're down 10% in the market, what is more likely, to get back to all-time highs or to get down 20% into a bear market? It is more likely that you're going to be back at all-time highs. But every bear market does have to start as a correction. So that doesn't mean just blindly buy when you're down 10% because the market's going to go back. But it just means that recognize that the bigger that pullback is, the higher the probability that you're actually becoming closer to a true bottom than you are closer still to the beginning. Though, of course, we have bear markets that have gone 30 plus percent, 40 plus percent, 50%. So it's not impossible when things get really bad. And when you think about like this situation that we're having right now, that's creating this bear market that we're in, and I'm gonna go ahead and call it a bear market at this point. S&P on a closing basis is not officially in a bear market, but I'm pretty sure the Nasdaq and the IWM are. And on an intraday basis, the S&P got to it. So I'm just going to call this a bear market for now. Um, this bear market, similar to other bear markets, is brought on because there's something that's really a game changer, right? Like really, truly a game changer, which in this case is just disruption of the entire global economy, which has become increasingly based on globalization and trade over the course of the last 20 plus years now at this point. So it makes sense that that degree of disruption actually would be something that could give a bear market and not just a correction. But yeah, most of the time, you got to just, like, I love when I'm feeling scared, actually, to remind myself about history and based on history, what is most likely to happen next. Is it most likely that the 20% bear market is going to become a 50 plus percent depression? Or is it more likely that you're going to find a bottom and either go sideways and eventually work your way higher? And it's the latter, and it's really the same thing even with corrections. So I like to know those statistics. They can just make me take a deep breath sometimes, but you still have to manage risk because all corrections, all bear markets start as corrections, all depressions start as bear markets. Why do I think that the aftermarket is so strong? I don't necessarily think it is. I don't necessarily think it is. I just think that we're moving like $10 every 5 minutes, $5 every 5 minutes. So I wouldn't expect that just to stop the second the market closed. So we'll see what we do. And I still think that the risk is to the upside. I would rather be long than short. I am still long. I will not be surprised to see a gap up tomorrow. My base case is a gap up tomorrow. Though I won't be surprised if we get a gap down because you shouldn't allow yourself to be surprised by anything right now with this market. But my base case would be that we gap up tomorrow. Though you never know with these news. Thanks, Josh. From Paul, what I am scared about is all the tax cuts and all the tax breaks are going to come from tariffs. No breaks until the deficit is under control. Yeah, I mean, we haven't, this just circles back to something that we've been saying basically since highs in February, though it was more difficult to say then because it sounded like you were maybe trying to be political at that point, but now it seems like it's much, much more of a reality. It really, truly doesn't seem like the administration wants the market to go up. It seems like they want the market to go down. And now people are understanding that that is for interest rate purposes and things like that because they very, very easily could be saying things that stabilize the market. They very easily could be giving more tidbits about the big tax cuts that are going to be coming soon and how how great it's going to be. And they're not really saying anything about the market, and that could be positive for the market, generally speaking. So it just keeps seeming like both the Trump put and the Fed put are kind of consistently lower. Though the Trump put is lower, it seems like just about everyone else that's around him at this point is already at their maximum pain point, because it seems like everybody else around them is trying to come out with positive headlines about negotiations and everything else, except for Trump himself. He's like, no, we're bringing this ship down so that we can reset it up properly or something. Yeah, so we'll see. SPIR is going for me. From Eli, I got some pretty decent reward. I think I'm a little frustrated that I didn't take enough size because the ranges on the 5-minute bars were so big. Well, then you shouldn't be frustrated if it's if you took the appropriate risk, you shouldn't be frustrated. You know, you don't want to look back at any trade that you ever took that works and say, I should have went with 1,000x my size. I should have went on every trade that ever worked for me with my maximum BP, but every trade that ever failed, I should have been super super small. You can't do that. You want to recognize in more of a risk skew context, if it's a higher probability, better risk reward trade, take more risk on it. But depending on what your entry is, there was a lot of space risk on those trades. When there's a lot of space risk, you can't really take too much size. Generally speaking, as the VIX is higher and as volatility increases, you want to take less size and look for having to take on more space risk, but also more space reward on the upside when it works. How scared am I going into tomorrow? I'm not that scared at the moment, probably just because my P&L closed decently well today. At a certain point at lows, I was down a lot still because I just had some swings on, and then was able to, close with okay green P&L. So I feel like I got a good little cushion compared to where I was at my P&L lows today to be able to play with. So I'm not too fearful, but I think if the risk is to the downside, is to the upside, and if we can just get a delay or some deals done tomorrow, that we could rip. And I almost don't see how we don't, but Trump has continued to surprise me. One of the big things that I have learned to make my decisions based on when it comes to macro policy from whoever is in power politically, and I've been through both Democrat and Republican regimes at this point. I've seen both sides. The one thing that has been a very constant is always that people are going to do what's best for them. And for the most part, when it comes to politics, what people want to do is what is going to get them and their people elected again and again and again. So I almost feel like this is the first time ever where I've seen a president make decisions that almost seem like they're counterintuitive to what would be his personal self-interest. Never really seen that before, and that's part of the reason how I got so burned on Wednesday last week. Was because I thought that he was, we had all these several different options, and more information was leaking that his people were trying to give him some better options that weren't the full nuclear mode, and then what he actually did was worse than pretty much anybody expected with what those numbers came out with on Wednesday. And it really struck me as like him doing what was not in his own self-interest. And the market, and obviously then we saw it happened, right? Thursday, Friday, worst, fifth worst 2-day session going back to 1960. Plus we had another, 5% gap down at certain points with the futures market overnight tonight. So that's the one thing that makes me nervous. It seems so obvious that the best thing for markets and the economy is for us to delay the implementation of those tariffs, negotiate things down, and give that some time to play out. It seems so obvious, and if what I think is obvious happens, then we're going up. But he's proven me wrong on several occasions now already, where he has done what I feel is not in his own self-interest, and that could happen again. So, well, that certainly makes me a little bit fearful. But otherwise, I think that we're gonna the risk is to the upside. A deal should get done. Yeah, Dave, I don't know. I don't know. That gets outside the realm of that gets too into the politics side of things for me. I want to keep it to the stocks like always. I who knows if that stuff is just said to troll Democrats or whatever, or if it's meant, if he means it or whatever. I don't know. It's not my business to try to figure that one out. Oh my God, this Bill Ackman chart is great. Great, but he wasn't crying on TV this time. Oh boy. Over to the YouTube here. Let's see what's going on. From Robert, as of today, April 7th, the SPY was down 5.85% intraday, closing at 505 spot 28, a sharp drop from the previous close of 536 spot 70. During the session, the SPY traded between a low of 505.14. Were those were Friday's numbers, right? That 505 and 525.99? Yeah. As of today, April 7th. Yeah, what a crazy couple days. Robert saying, according to my platform, we were down 4.43% at the lowest point. Okay, great information. That's what I was looking for. The anti-Kramer ETF from Apex Joy. Why, after the White House said 90-day extension is a rumor, the market still held up? Well, it did pull back off that. You know, we erased the up move, right? So here is where that headline came out, and then we did fully negate that upside move, and then we held in a little bit better because we held a little bit better because we're the most extended the market has ever been ever, and there were some positive incremental headlines coming out, even if they weren't as good as a 90-day extension. So we had that brief rip higher on that rumor, came all the way back down when they said it wasn't true, and then we kind of just, we stayed relatively range bound. We still had candles that were $5 candles in 5 minutes, but we stayed relatively range bound. Also, has the market priced in Trump's comments on the 50% more tariff on China? I don't think so. I don't think that the market has priced in any of the tariff numbers as they were stated still last Wednesday. I think that if he were to do those numbers across the board and, let's say, leave them in for the entirety of his 4-year term, that we would probably go into like a depression, maybe down 30 to 50%. Big picture in this market, it would be tremendously terrible. So no, I don't think that that's priced in. I think that when stuff like that gets said, they price in a probability of it happening. So the probability of it happening did increase dramatically over the confines of this down move. But I still think a lot of market participants, and this includes me, are betting on the fact that those numbers are not going to be done. And that's just because that's rational. Yeah. China and the U.S. are just trying to go tit for tat to set up for negotiations now. They're going to be the hardest one to negotiate with in a lot of ways, I think. From Formula One, I like the idea of Monday range plays across the board. Trade below today's low, reclaim and aim for Monday's highs. Risk define stops below the deviation once they form, preferably on a Tuesday or Wednesday. Yeah, I get the concept. I think it's a little bit trickier when you're moving this big, but I get the concept. From Robert, on Thursday you were going fully long into Friday because you believed in daily extension. Can you walk us through your mental side during Friday pre-market when we were starting to go down? Yeah, I was very upset. The question is basically, I know you were, net long going into Friday, and what were you thinking when the market was getting smoked? What was where was your head at? I was not happy. When I first woke up on Friday morning, we were down like 0.5%, and I was like, okay, fine, not too bad. I can manage this. I can manage this. And then China came out with that headline that wrecked us. And I got smoked. I'm going. I said this in another meeting recently. Um, I don't sell into extreme downside extension, and there have been a few occasions over time where that has really hurt me, and Friday was one of them. I got I think Friday was the worst day of my career. I got wrecked. But in the long run, that idea of not selling into extreme downside extension has made and saved me a lot of money, and works with a much higher probability than the opposite occurring. So, uh, walking through my mental side, Friday sucked for me. I was locked. I was like, Friday was the first day I can remember in a long time where I was basically locked out all day. But, past my max loss, past my system lockout, I was basically locked out all day. Um, I don't remember that happening. I mean, there have been times where I've triggered my lockout. There have been times where I asked Risk at T3 to get an increase in my lockout, and they give it to me, and I continue to trade. But the amount of money that I was down on Friday, I was down by my lockout so much. I wasn't asking for it to get increased. I just basically wasn't able to trade for the day. I was just communicating to the team as best as I could what I would be doing if I could trade, or what they should be doing. That ended up really helping me because I didn't really buy anything at all on the way down on Friday. I wasn't involved with any of those trades that I had called out during the day that worked a little bit but then failed, and there was a number of them. Um, and then when we got the gap down this morning, I was like, okay, this is the one where I'm buying everything. I'm buying everything this morning. I'm buying everything that I didn't buy on Friday, and I'm buying everything today. And that worked out pretty well for obvious reasons. But walking through the mental side, I was very upset when that China headline hit, pre-market. I may have shouted a bunch of four-letter words at that point, but I mean, what am I going to do? You kind of just have to accept things as they are, and do the right things in the moment. And by the time the market opened, and by the time I did the morning meeting, I was down a lot of money, but it's business as usual. I can't panic. Um, so it's business as usual in the morning meeting, business as usual throughout the day, except I wasn't trading super actively like I normally do, and I was just doing my best to communicate information as best as I could to the team. And that's it. Appreciate the question, Robert. I hope it helps. Um, were there any time frames for the zero tariffs with the EU and Taiwan, or were those just offers? Yeah, I mean, we've seen several countries. I don't know if the EU one was very serious, but Taiwan, Vietnam, several others seem like they're willing to do, no tariffs, if we're willing to agree to it. But there's been nothing put down in writing, which is disappointing to me. I would love to see, if the whole reason why we're tariffing other people is because the trade policy is unfair because they tariff us. I would love to see a country who says, well, I'm willing to do zero tariffs across the board, and then us agree to it. Um, but, that's yet to happen. Yeah, I agree with what Vikas said there. What do I think of Alibaba? Alibaba is tricky because it's a Chinese company and it moves based on the overseas market, so it's going to be gapping a lot. But I like China a lot into this down move. I know that they're getting hit hard with the back and forth between China and Trump. China hit themselves pretty hard with their announcement on Friday morning. That Trump came out today. Trump came out today and said that we're going to do it. And I mean, I was making fun of it when I was on the VTF earlier. This is so ridiculous. We made up some 67% number that China supposedly charges us, so we're going to charge them 34%. So then China says, all right, well, you're charging us 34%. That's not a real number, so we're going to charge you 34%. And then Trump says, well, you're going to charge us 34% on top of your already unfair number, so we're going to charge you 50% additional. And then, I mean, it was like, just like back, like, let's just cancel trade. Let's just cancel it entirely. You know, like it just, where are we going to go with this? But I still like China a lot. I think they got a lot of levers that they're gonna pull. If they're gonna choose to fight this battle, one of two things is gonna happen. I think either they're gonna make a deal, in which case everything is better, and these Chinese names are gonna move higher, and the U.S. names will go higher because a deal got made, or they're gonna battle it out. But if they battle it out, they are going to devalue the yuan, and they are going to unleash massive stimulus. And, I just think that's going to help hold the market up. It's going to help hold the stocks up. That's what they're doing. So I like the Chinese names. They're risky for sure, but still super cheap from a multiple basis. Have massive buybacks. I think there's a lot to like there. So I added significantly to Alibaba into the gap down this morning. From Liam, have you seen the 5 rate cuts priced in, and what are your thoughts on that, and how that may give markets a boost? When do you think that first cut will come in, if you have thoughts on that? Yeah, I don't know. I don't really trust what the market prices in, because what the market has priced in over the course of the last 5 years on what interest rates are going to do has been so consistently wrong. What has always been right, almost always at least, has been that the Fed does exactly what the Fed says that they're going to do. And, the Fed seems to be hinting that we're going to get 2 cuts, maybe 3. The Fed seems to be hinting that they're in absolutely no rush to cut. And I agree with Jeffrey Gundlach about them using the balance sheet to stimulate prior to doing any. I do not see, unless stuff is really hitting the fan, I do not see the Fed doing an emergency rate cut. I kind of feel like they almost should, but they're in a tricky spot. We don't know what the policies are going to be, right? We don't know what the policies are going to be. We know, generally speaking, that tariffs are, so this already makes it tricky. We know, generally speaking, that tariffs are high inflation, low growth policies. That is the opposite of like the dual mandate of the Fed. The dual mandate of the Fed is employment. The read-through on employment to some degree is growth, because if growth significantly slows down, then people begin to lose their jobs. And stable prices, ideally 2%, right? That's what they said that the target is. Well, they're now, the government is implementing policies that hit both sides of that mandate the wrong way at the same time. And pretty much all of the levers all the tools that the Fed has to be able to battle either high inflation or low growth are opposite of one another, right? They can lower interest rates, which would stimulate growth, but that also stimulates inflation, or they can increase interest rates to lower inflation, but that also lowers growth. So what do you do if policies are ongoing that are low growth, high inflation policies? Do you cut and risk inflation going through the roof? Do you raise and risk a huge recession and make the growth slow down even worse? It's really, really difficult. But on top of that, and this is the problem, I think, in so many regards, and you can have your debate on the benefits or lack thereof of these tariffs, but the hell was my point I was about to make? But the point I was going to make is, we don't even know truly what the policies are actually going to be. I know Trump keeps saying over and over and over again, these are the policies, these are the policies. So we'll see if they actually get implemented. But I don't think they seem like they change with the direction of the wind. We saw it. Don't forget, we just saw this with Mexico and Canada like a month or so ago, where he's putting on the tariffs and then he's not putting on the tariffs, and he's putting on the tariffs and he's not putting on the tariffs, and now again we're kind of going through the same thing. So if you're the Fed, you don't know what to focus on, and in some ways even worse, and this is what I keep saying, and this is a problem, and this is one of the main reasons why this needs to get fixed immediately, is if you are in corporate governance, right? If you're in the C-suite for an S&P 500 company, you need, especially if you are in a business that's involved with import export, you need to have clarity on policy so that you can have corporate strategy for what the best thing is to do for your business. And without clarity, you can't have corporate strategy. So how can the Fed have a strategy if there's no clarity on what policy is? How can companies have a strategy if there's no clarity on what policy is? It's it's so hard. It's impossible. So I don't know what the Fed's going to do. I don't think that they're going to be in a rush to cut. I think they're going to be in wait and see mode. But I'm starting to get in the camp that they should cut, which at first I wasn't. At first I was like, they should wait and see. But the fact of the matter is, the more time that goes by without us getting true clarity on what's going to happen from a policy perspective, the worse the read-throughs are on growth for the economy and for the companies that make up the S&P 500. And therefore, I think the risk gets more and more steady towards the employment and growth side of the mandate than it does the inflation side. Because if we don't have clarity, growth can slow down by so much that even though tariffs are high inflation policies, growth can slow down by so much that prices don't go up. And that seems to me the direction that we're moving in, which is making my mentality becoming more towards, hey, the Fed maybe actually should do a cut. But what I think that the Fed should do versus what they actually do, is sometimes different. I was saying, the Fed eventually started cutting interest rates last year, as we know. I don't remember where that first cut happened actually now. But I remember that I was saying for several months prior to that, Fed should start cutting now. Fed should start cutting now. Because we were below 3% inflation. Inflation had come all the way down. They could do it. And I actually felt that it would lower inflation a little bit, which I don't feel like getting into that again if we actually cut interest rates at that time. Pretty sure Alibaba only has 17% of its revenue. I'm surprised it's that high. Alibaba has 17% of its revenue in the U.S. That's more than I would have expected. PED has a lot. From Dave S. I forgot to ask, actually, does any of the info on systematics posted the past few weeks matter now that we have a new floor to trade off of today? Well, CTAs are very, very small sellers over the course of the next 1 week. The number got posted somewhere for U.S. markets. The CTA risk is actually now more in the international markets where they're still long. I think I saw CTAs are over $30 billion short SPX right now. And we're below even that lowest pivot from the Goldman note that's provided. So they're like flat now as far as what they're doing. They're not buyers this week. But the selling that's coming from the CTAs, I think, is relatively small. It's like $2 billion in a down tape, I think, and like flat in a flat tape. So they're kind of a non-event. The vol control funds is a little bit more worrisome. We had 2 realized vol days in a row of 5+%, and I think that makes them significant sellers. I think today maybe helps give us a little bit of relief on that front, but they're still selling. They might be selling $5 billion a day right now. I'm not sure if Bill K is still listening. Maybe he has some more specific numbers on kind of where that's at. But the systematics matter, but I think they actually matter a little bit less right now than they did previously. But they're not helping. They're not buying. From Greg, after also losing a reasonable amount Friday, I had a significant long trade into today. I mapped out my max loss based on my defined risk with my call spreads I had and a stop on the T-Q long at that loss point. I decided I was willing to lose X amount based on this being such a historical move. More risk than usual for sure. I think that's all great. I plan to further buy at each level down before my stop, basically an adjustment from the T-Q into more calls. I only went to 390, so past there my plan was to sit. Based on the buys I got, I knew I wanted to get Friday back and more for the risks I took. I love that. So I was a greedy seller. It was very helpful to not think today. I executed much better than usual. I love everything that Greg just said there for the most part. Love the idea of having a mechanical game plan in place, that you're just following your preset game plan based on what you've established for yourself before the market was even open. It gets rid of the emotional aspect of things. It's 100% the right thing to do. The thing I would say is I think I'm not a huge options trader. I'm definitely more on the equity side, and there's people here who are more knowledgeable on our team than I am. But it seems to me like you might not be getting the best juice by buying calls in this environment with the VIX as high as it is. You might be better off buying the shares. I remember actually now Bill Kay saying this morning that he's going to be doing some buying of shares, and I don't think I've ever seen him say that before. But that just goes to show you, the reward aspect is a lot more limited in buying options right now with where the VIX is than if you maybe just buy the underlying. Everything else he said I love. Baba revenue in the US is sub 10%. I would expect it to be sub 5%, sub 3%. They had a premium in the SPX built in all the way up to 5,500 on the 0DTs, which is bad for buying. Thank you, Dave. Back over to the YouTube. See if I missed anything over there. From AR. What do you think of the first two sleep token singles? I don't know what you're talking about. What do you think of the first two sleep token singles? I don't know what a sleep token is. Sounds like some crypto nonsense. So I don't have any feedback for you on that one. Apologies. All right, I'm shot. I'm exhausted. Been up since 2:15. I've barely stepped away from my computer since that point in time. So let's wrap it up there. I think we got to everybody's questions. Hope everybody had a good day today. There were great calls today. There was a lot of opportunity out there today. I hope everyone maximized it. Definitely, do your work on your own just to make sure that you have good game plans. Figure out what adjustments you need to make to your game plans so that you can continue to become a better trader as time goes on. Have a good night, everybody.